Hi, welcome back. Well, it's a weak showing from Quess Corp in the first quarter, so let's discuss that now with our guests. In fact, the revenues grew just about 1% in this quarter. The EBITDA was actually down almost about 12% and the margins have also crunched down. Of course, it was a one-time COVID-related cost of 6 crores that hit their margins this time. Suraj Moraje, the Executive Director and Group CEO of Quess Corp, joins us now to make sense of which way things are headed and to just tell us what's happening with staffing itself. Suraj, hi, good morning and thanks for joining us. Very challenging times for the entire sector and for your company as well. I just wanted to start by asking you, what kind of growth target are you looking at in FY21? I know it's perhaps too soon to tell, but any initial indications?
No, it is too soon to tell, and certainly very tough to give a number. I think what we're trying to do right now is focus on sales. We had a good sales quarter. We acquired about 200 new logos in the quarter. And I think we're keeping the foot pressed on the pedal at this point to bring in customers, expecting that as and when recruiting picks up, we'll come out all guns blazing. At this time, stepping apart from our performance, I think we were hoping to see in July itself, we were hoping to see some recruitment pick up. And we have seen more mandates in July than we saw in June. We are hopeful that as we enter the festive season and get closer to Diwali, we will start seeing a little bit of an uptick. Obviously, it will depend a lot on how these sporadic lockdowns go and how the public sentiment changes. But we're hopeful. We're hopeful that the bottom is nigh.
Suraj, if you can elaborate a little more, you said July is better than June. Can you put some numbers to it? And one would have thought that work from home will generate its own kind of staffing requirements, like delivery boys or home cleaning. There are people who are offering these kinds of services. Did you see any of these typical WFH kind of services coming your way?
No, so we've absolutely seen that, if you look at our customer base, some customers have added and some customers have subtracted. Clearly, the e-commerce sector, for example, has added. And clearly in retail and BFSI, we've seen subtractions, right? At this point, I think we're at a place where the drop in headcount is sort of bottoming out, right? So therefore, we do in this industry have a natural attrition of, let's say, anywhere between 3 and 5% a month, just based on, because these are young people who move jobs. At this point, we do see it start to flatten out. You must understand it's different by segment and by vertical. So in general, staffing really, at this point, we're hoping that the retail and the Diwali volumes will drive more BFSI and retail, and we're starting to see signs of that. We were hoping cinemas would open in the beginning of August. That would have been helpful to get volumes into retail. Alas, that hasn't happened. On facilities and security, really where our exposure to the IT services vertical is maybe about 20%. There we do see that work from home is driving in the short term a bit of reduction in needs. Now, as and when people do come back to work, we expect that to ramp up, and there's again a question there of when that happens.
Why did you say BFSI went down? That vertical actually did well. I mean, they were essential service. Banking, finance is doing well because of the markets.
Yeah, and look, I think you've got to again take it a little bit segment by segment, right? If you look at our facilities management and security, their work in BFSI did not slow at all. In fact, BFSI is at its pre-COVID levels. But if you take general staffing, where a lot of our people are really field sales people, frontline document collectors, sales activity has slowed down. In the BPM segment, where the country's leading collections agency, professional collections agency, and their collections are down because of the banking moratorium, and collection efficiency is certainly down as well. So I think different parts of the value chain in each industry is impacted in a slightly different way. We do see BFSI again. If you look at the sales on credit cards and the sales on loans starting to pick up now as people anticipate higher sales of durables and just higher shopping levels through Diwali.
Okay. Well, you acquired Monster.com in 2018. I was on that portal. I mean, not for myself, but just to check what's happening in terms of traction. And it's very interesting that you have a separate, tab for work from home jobs across various cities. How is that doing? I mean, what kind of traction are you seeing there? And overall, the traffic for Monster, I mean, what has it been so far?
Sure. By the way, you should also feel free to sign up. I guarantee it's a great experience.
No, she will not. She will not.
But,
I'll block it on her computer.
Look, I think that Monster, like some of our competitors, has seen a drop in sales and search volumes, and I think we've put some of those numbers out. I think search volumes are half of what they were. And you got to break it down into, if you break the customer segments into two parts, there's enterprise customers who hire for their own needs, and then there's recruiting agencies who hire for their customers. We certainly see that smaller recruiting agencies are being very cautious in renewing their subscriptions, and we certainly see that search volumes are down. Now, there are some segments a bit more alive than others. I think in IT services, we do see search going on. We see in healthcare a little bit of an uptake. But overall, clearly, even the large enterprises, the multinational customers, they globally do have hiring bans on right now. So they're also buying fewer licenses than they were in the past. Monster itself is, I think, as a business, doing better than ever. We have put up a special COVID page to try and help people and to try and get work from home jobs as well. And the response has been good. But I think it's just a sign of the times. I think what we have to do is build a great system, build a great business, and then let the rising tide carry us away when the time is right.
I think, Suraj, we've been treating you as a sounding board for the economy rather than ask you about your company. You did 36 crores this quarter. What should we expect the year in? Will it become like 200 crore for the year? Just a ballpark idea.
I really wish my crystal ball was working, but it's broken. See, I think what we're focusing on at this point is, three things. One, from a revenue perspective, we are focusing very hard on acquiring all the customers we can. And we do, one of the things we're finding in these times is the way our operations have conducted themselves during the COVID time is getting us a lot of interest, because the reputation does build. And in an industry which is highly fragmented, where many players were not able to pay salaries, were not able to deliver during COVID, we do anticipate a flight to quality on the revenue side. I don't want to quantify it, but we're certainly seeing it. Like I said, we had 200 customer acquisitions in Q1. We're focusing on cost. Our indirect cost in Q1 was 20% lower than our indirect cost in Q4, and we see a large part of that sustaining. And we are further working on our costs, on automation, on technology enablement, and so on and so forth. And finally, we're working on collections. You would have seen that our cash generation last quarter was 148 crores, which is almost 2.5 times the cash generation from the last quarter. And I think this is testament to, our teams are working really hard at collections, but also, I must thank our customers. Our customers are the largest enterprises in India. Not one major customer looks like they're about to default, and they've all, by and large, been paying on time. And we thank them for that. So I think these are the three things we're focusing on. I think in times like this, we can't choose the times that we live in. What we can do is choose how we respond to these times. And these are the three focuses: customers, cost, and cash, that we've kind of put in place. And we're confident as we come out, Quess will be seen coming out all guns blazing.
Okay, your investors seem to be very hopeful. The stock is up almost 3% right now. Thanks, as always, Suraj, for joining us. And yes, these are very tough times. We can't control the times, but we can control our reaction to these times. All right, so that's Quess Corp for you. But let's move on. The stock of the moment undoubtedly is Dr. Reddy's. Just look at the way it's zooming now like a rocket, over 4% higher, and now it's a 60% gain.